Hello and welcome back to Onchain Reaction. I'm your host, James Bennett, and today we're going to look at what's going on with Bitcoin on and off the chain. Okay, so we start here with probably the biggest story in the news at the moment, which is that the block times have hit an average interval of around 15 minutes, which is the highest we've seen since 2010 when Bitcoin started trading on the market. So what we're looking at here in blue, we'll start with the not so obvious, is the 14-day moving average of that block time in minutes. The horizontal dotted line coming from 10 minutes is indicating that the average block time should be, as per the network's code, every 10 minutes. And the grey behind that is the difficulty rate, which adjusts every 2016 blocks, normally around every 2 weeks, in order to make sure that those block times are staying around 10 minutes. It's sort of magic, but it's also this elegant design that is the Bitcoin network. Now, what's happened, if you look to the far right hand side, is that the block time has increased to around 15 minutes, which is an increase of 50% above what the average block time should be. And you can see in grey just behind that, that difficulty has adjusted downwards twice, the last 2 times in a row. And we're set at the moment, if we carry on this rate, I think the next difficulty adjustment's around the 3rd of July at the current rate, and that could be as much as a 22% drop in the difficulty rate, which would be the largest we've ever seen in Bitcoin's history. Well, why is this happening? Well, it's really down to China. And what's happened is that the Chinese government on, I think, the 9th of June and the 13th of June came out in 2 different provinces, big provinces, Sichuan being one, big mining provinces in China, and essentially said that they can no longer use electricity. They cut the electricity to these mining plants, and of course a huge percentage of the network that's been mined through those Chinese facilities has gone offline. So, is it a disaster for Bitcoin? Well, no, it really isn't. You would have heard a lot of people spinning the positive line, which I very much agree with here, which is that all that happens is that other mining facilities basically end up with a higher percentage of the total network than they had before. So you're increasing the distribution of that mining power across different entities and definitely different geographies, with China going out of the game. But now we get to see, what we think China's hash power actually is. Estimates have gone from sort of 60% of the network up to 85%. And I think over the next few weeks, we'll really get a picture of just how much mining power was coming out of China. If you are in the market for a second-hand ASIC miner, then I hear that they're going pretty cheap at the moment. So do check that out if you're interested. So, that's the kind of structural look at the Bitcoin network. But if we look at what's going on chain, which is within the economy, we're also seeing at ByteTree with our on-chain data that there's quite a significant drop in demand taking place on the network. I just want to indicate a point here to the mempool. So the mempool is like the waiting room. So if you have a transaction that you want to put on the network and it's really busy, it will sit in the mempool until a miner picks it out of there, puts it into a block and mines it onto the chain. Mempool basically tells us when there is a backlog of transactions building up. And here you can see this chart from actually mempool.space. The color banding, is the size of the transactions. It's not so important. You're really looking at the overall height of the bar chart over the last year. That's the period that we're seeing here. And you can see really on the far right that, we're not at a very high period of demand. So although throughput on the network has dropped by 50%, we're not seeing many transactions building up in the waiting room because there just isn't that much demand on Bitcoin at the moment. Those 2 peaks you can see, one is in February of this year and the other one is in June. But since then it really is quite quiet. Just to back that up, because there aren't many transactions trying to compete for block space, the average fee to send a transaction is actually close to 12 months low. So here, this chart taken from the ByteTree terminal chart section, updating live, shows over the last 12 months that the fee has gone from about sort of 3% of the transaction value right the way up to about 13-14%. This is on a 1-week rolling average, and is now trending back down again. So really, fees are dropping. Now, why are fees dropping? Well, another reason here is just that the number of transactions is falling fast. similar to what we saw in 2017, although not quite as drastic as that event. So I've circled here 2 periods. Sorry, I should say the blue line you're looking at is the transaction count over a week, so a rolling 7-day period, so that you don't get this sort of lull over the weekend, and it keeps the data consistent. And then in orange you're looking at the price. You can see the left-hand circle there, January 18, late 17, huge drop in transactions, number of transactions, and then that built up through the next, through the bear market. We went from right down to the bottom up towards the mini bull market, middle of June 2019. You can see transactions went up, then fell again, during the mini bear market that led up until just about the beginning of last year. And then from the beginning of last year, transactions have been relatively flat. That's hitting capacity of about 2 million transactions a week, which I believe is around 3.5 transactions a second for Bitcoin. And then, of course, on the far right-hand side is what we're really interested in at the moment, which is that these transactions have fallen off really sharply, right back down to a similar sort of region as we saw in 2018. And of course, the price has followed suit. Now, short-term, really interesting behavior here. The number of transactions and the price of Bitcoin have been visually pretty correlated. Now, I haven't actually ran the R-squared numbers for this, which would indicate the level of correlation. I will do that for you, so please do keep in touch with ByteTree on Twitter to see any of that. And of course, always reach out if you have particular questions or certain metrics you want to know more about. Do just reach out to us at ByteTree or me on Twitter at JamesOnTheChain. Right, back to the data, which is what it's all about. Here we're looking at transaction count in blue, price in gold, exactly the same chart as before, but zooming in on the year-to-date picture. And I just wanted to really show you that transaction count is a non-price indicator, right? So there is literally no correlation just because of price, in the same way that transaction value could be said, to be a price indicator because you're taking dollar as part of that equation. Here, no, it's literally the number of transactions, and especially since March time, those local peaks and troughs and peaks again have really correlated with the number of transactions. So something that we're looking into more at ByteTree to understand that relationship better, but it's a really interesting one to see that correlation playing out. Okay, here's a really great metric. Number of active addresses. I've taken this actually from Glassnode, who's in the same sort of data space as ByteTree, and this was courtesy of Lewis Harland, who's an analyst that put this on Twitter, so just wanted to give him a shout out there. In orange you're looking at the number of active addresses, and then in black you're seeing the price, and the number of active addresses has literally fallen off of a cliff, similar to what we've seen with transactions, and in fact across all of the demand metrics that we look at for Bitcoin. It's not indicative of a dead network or anything like that. It's just that there's been a lot of excitement in the last sort of 12 months, and now people are taking check, and really everything has slowed down a lot, and we expect to see potentially further pressure, downward pressure on price if this demand doesn't pick up, because there isn't much sort of activity going on for Bitcoin. Okay, lastly, I just really love this chart. This is taken from ByteTreeAssetManagement.com/Bitcoin flows. We're looking at the total number of Bitcoin held by funds across Europe, US, Canada, and it's a really good indication of what institutions are thinking about the state of the market. So you're looking there in orange at that total number of Bitcoins held by funds, and in blue you're looking at the price. And whilst we've seen a steady decline in selling, it really hasn't picked up again, but it has started to sort of subside and stabilize, if you like, over the last couple of weeks. So maybe there's a bit of indecision. There is definitely some selling activity, but there is also still some buying activity. Look, that's all I have got time for this week, but please do reach out if you have any questions, and until then, have a great week.